Hi traders, coach here at TradeGATEHub.com. We are powered by TradeView Markets. I want to start off with the Euro Pound. I've been talking about it basing out. We had a 3 drive. We had it tested. We put in higher lows in here. And, the action shows on the board with the Euro up 24 right here. And there you go. And cable holding on to the 127 level, which I think is very critical. We start getting closes under 27, it's going to look pretty vulnerable. That's not my belief. I think there's another push in the euro, but I do believe euro will lead it this time. We had those bad numbers out of Europe on Friday, and I said to wait for pullbacks between 108.50 and 108. We went to 108.5. I didn't get long. It was a Friday. This is where we closed. We are something to keep in mind. We're coming up to end of month, but also end of quarter. So there could be some flows. If euro did pull back again to 108, I still think it would be a buy. So, I'm still looking for lower dollar now. Okay, so we could still get another push up towards here before it fails, but to me this looks like it could just be a failing rally. I'm looking for new lows, a little bit of a panic under parity under 100. So that could I still think the targets up towards 112 in euro are viable. This is how I come up with it. It's a very important moving average coming up around this 112 level. I think we could get there, and we'll see what happens if we get any kind of pullback. But if you're bearish a dollar, your preferred long right now is the euro. And if you're bullish a dollar, your preferred short is going to be cable. Last week I covered the Aussie short from the Friday before a little early because it did go to target. Target was 6.5. I covered into 7.5 level. We had one more wave to the downside. I'm not interested in being short Aussie from down here, but I will be paying very close attention to it, especially if we get a rally in the euro up towards those 112 level, which is 300 pips from here, and the Aussie cannot make a new high. That would be a pretty interesting market tell and a preferred short. So the Aussie came off with risk off. Let's see what it could do if the market tries to rally and the dollar comes off. This may have ended up being the top, although if we do have a little bit of a panic under parity in the dollar, which is still 200 pips away, 220, that we could get maybe one more marginal new high, but I think it'll be a struggle. It's not going to clear these highs, I don't think, by more than 100 pips should that scenario unfold. For weeks, I've been talking about the yen being able to achieve a 143 target. It did it in spades, almost traded 144 on the data that we had from Friday. There's now some talk about intervention. I was talking to a trader friend of mine, the difference between now and last fall when they were intervening, and they did it successfully, at least for several months up here when we were peaking up around the 150, 152 level. The difference was, it was October. The difference was at that time, the euro was at the lows. So it's a little different situation now. It was a strong dollar pushing it up. Now the dollar is not as strong, obviously. Look at where the euro was then, the last time the yen was rallying the way it is now, and where the euro is now. So a little different situation. My negativity in the end was based upon that I think yields were going to pull back. Thought it might be some kind of risk off we would get, but here you go on the 10-year. We're down a few bips today. Again, the 360 level being very important. I'm calling this a descending triangle. So as you can tell, it's holding this 200 on the 4. but next time I think we'll see 360, then we'll see 330, and then I think we'll see under 3% long-term yield. So that's the way I'm looking for it. I'm not in the camp that from here we're going back to 0 or 2% or anywhere close to where we were before, but that this is just going to be a correction in a long-term bull market of rates going higher. So should this occur, we should get a pretty decent break in the yen as well. Also should get a decent, at least bear market rally. I was talking about that. I think it begun. I tried silver around the 2240 level. I've taken some off the table, but if the yen can come off some more, perhaps we get some type of bear market rally in the gold as well, back up towards this 1980 level is still possible. I've been telling people to hold off on that because of the weakness that we've had in the miners, which we'll see if we get any kind of bounce here, that maybe we could get some kind of bounce back to 31, maybe even 33 in the weeks ahead, especially if yields continue to drop and the yen pulls back, say, towards that 138 level. So that's my view on the currencies and the metals. Something I want to make you aware of, that the close is going to be very important. So you can see I talked about the throw over last week on the S&Ps, and we're hanging on here by a thread. We could possibly not close under it for a day or so and try and rally back to 380 or so, maybe 4,400, but I think this makes it vulnerable for initially some type of pullback towards 4,200. It did have a confirmed high, but the fact that it's negating the throwover is not such a great sign. And one of the reasons I think that we're due for at least a pullback is I pointed out how bad the banks have been looking. And the banks have also really been under a lot of pressure. Here's your XLF, and these are the best of breed. These are the majors. And to me, it looks like all we've had is consolidation after a big break. And I think we're headed lower. I think we could make new lows here in the banking issues. The regionals look just as bad. And so here's a look at the regionals. KRE right here. Similar pattern, only weaker. I think the regionals could go to 28, and what's the significance of 28? Well, I'll show you the monthly. The significance of 28 back here, and during the COVID crash, that would be the COVID lows. So that's where I think we're heading. That could be a reason why yields drop. Been talking about TLT and thinking that we could have some type of flight to quality. TLT hasn't yet penetrated 104. That's going to be a real important area for the bonds, the longer end of the market. But we're trying. There's the monthly. A little shorter term, you could see on the 4-hour that we actually got to 104, and I guess you could call it rejected. So now we're in this range between 102 and 104. We get over 104, I think we'll be headed up towards 109. And as I said, here's that weekly ascending triangle that if we break out, first we get through 104, then 109, we could be looking at 120. I still think that might have something to do with risk off or a correction in the stock market. Want to take a look at the crude oil market as well. It had a pretty negative week. Are we going to head back down towards 62 and test this line? I think it's possible. So, I'm still being patient and monitoring this. And if we take out this 68 level, we could have our third drive down here. And, something I don't talk about all the time, but, a lot of people are celebrating the rally in Bitcoin. And I caution I'd throw a little caution in there on the Bitcoin as I look at the, I believe it was the 4-hour chart. Here you go. So here's drive 1. Here's drive 2. And a new high, we could have some divergence. Maybe we go to, take out this high. What was it? 31.5, maybe up around 32,000. Be careful, because that could be 3 drives to a top. I believe that that's the major thrust of my talk today. Keep an eye on important support at 127 in the pound. If that gives way, you could be talking about 126, and I'd buy a hard break in euro if the dollar rallied one more time, which I pointed out earlier. We get one more push up towards 102.80. You might have another chance to buy the euro, and maybe even under the 108.5 low. This rally that we're having in silver, which is starting to give up some here, is what I'm looking for is just a bear market rally. As you can see in the gold, we had this breakdown. Then Friday before the number, we had it looking like it was going to be a false breakdown. I think we'll hold 1920 on any break here, if I'm right about US dollar yen, and again, make a move higher. I don't think it's going to be the low, but every high and every low starts off as a high or a low, and knowing whether or not it's a major high or low is rear view mirror stuff that you only can tell by looking back after time has passed. So I'll leave you with that. Pay attention to potential risk off. The market's due for at least some type of correction, and I would expect that the NASDAQ will be weaker on this decline. Just like it led on the way up, it could lead on the way down. So rates, looking for lower rates, looking for eventually a lower dollar to take out par, looking for bear market rallies in the metals, and looking for a period of risk off in equities. That's your major takeaways, and good hunting, everybody. Join us here at TradeGATEHub.com and share your ideas. Iron sharpens iron. And above all, don't just count your